Tesla is continuing higher today on news of price cuts in Japan, some additional features to Tesla coming out of the vehicles produced in the Germany Gigafactory, as well as some very bullish option flows. Not to mention, we just got the Fed minutes, and we have all of it for you in this video. But before we get into it, if you want to make more money, you want to grow your net worth, if you want to reach financial freedom as quickly as possible, which should be every single one of you, hit the subscribe button as well as the like button to stay up to date with all of this information on the broad markets as well as with Tesla stock every single day. The Dow Industrial Average as well as the Russell 2000 are down by quite a bit today because there's fears of this global recession. The Chinese Services PMI fell to 53.9 versus the estimated fall to 56.2. Anything above 50 is still growing, but this was a much bigger collapse to the service PMI than what investors were hoping for. Weaker than expected demand weighed on business activity in June. While total new businesses expanded, the expansion rate slowed to a 6-month low. Despite the weaker demand environment, firms became more optimistic for the first time in 5 months, citing improved economic conditions and new business as contributory factors. Tesla reduced the price of the Model 3 and the Model Y in Japan. The EV makers cut the prices of all variants of lower-priced Model 3 by about 3%, while roughly 4% for all Model Y variants since the beginning of the month. The Tesla Model 3 is now priced at 5.25 million Japanese yen, equals out to $36,359 US dollars, and the Model Y at 5.64 million yen, which equals out to about $40,000. These price cuts have not affected Tesla stock all too much today, and I would say it's because Japan's just not a huge market for Tesla. So if Tesla does cut prices slightly for Japan and it spurs more sales, that would be a net positive for Tesla in Japan. In the news today, the German-made Tesla Model Y rear-wheel drive is now available in Midnight Cherry Red and Quicksilver. What's actually bullish about this is that the base Model Y costs $48,850 in Germany, and the only free color option is Pearl White. Quicksilver cost $3,300, while Midnight Cherry Red has a $3,500 asking price. The Solid Black sells for $1,300, and Deep Blue Metallic for $1,750, making for a slightly different color palette compared to what's available in North America. And these different colors are going to mean for a much higher selling price for Tesla, and this should be mostly pure profits. So this should help out that bottom line and increase margins for Tesla in Europe. We also have some recent unusual option activity for Tesla, and you can see some very bullish positions. Out of all the special options they uncovered, 33 are puts for a total amount of $1.9 million, and 132 are calls for a total amount of $8.5 million. When you scroll down, the price range on Tesla in these unusual options is in between $200 on the low side and $390 for Tesla on the high side. As you can also see from this chart, the left side is the blue, it's the call option activity. The right side is red, and it's put option activity. The put option activity in Tesla has fallen off a cliff almost every single week, declining, whereas the call activity has remained much much higher than the put activity. For obvious reasons, Tesla stock has continued to rise, and a gamma squeeze could soon be one of the reasons that sends Tesla stock much higher from here. But before we get into the option activity or where the current short position is at, we need to get into the sponsor of this video, which is us, this channel. We don't take sponsors, but we sponsor ourselves. If you guys wanted some Tesla merch, we have some pretty cool designs that just launched, link down below in the description of this video. I think this one's pretty funny. Elon versus Mark Zuckerberg shirt, Tesla to the moon, hashtag buy the dip, and Tesla stock with Tesla stock performance right on the shirt. So if you want to go out in public and tote the Tesla way, this could be a good way to do it. Again, link down below in the description of this video. Total call volume today is 62% expiring this Friday, 38% volume to the put side. And some of the most active strikes are, again, the $300 call, seeing volume so far at 49,000 today and open interest sitting at about 42,000. Other big option expirations are the 280 call, where you have open interest at 19,000 and volume of 90,000. When the volume is this much higher than the open interest, that's signaling a lot of fresh options are being bought. The 285 call is another popular strike with an open interest number of about 20,000 with volume of 63,000 on the day. Again, 3 times higher than the total open interest. And the 290 call with open interest of 18,000 with volume on the day of 46,000. The option buyers are out in full steam ahead today. This likely means Tesla continues higher from here, starts to break above key levels, and moves above that $300 price. And a gamma squeeze is different than a short squeeze. A gamma squeeze works based on price action, breaking above big strikes, which in this case, the 280, 285, 290, 295, and the $300 strike, in which you broke above the 280 strike today, and then the market makers forced to buy thousands of shares, sometimes millions of shares. For an example, the $280 call expiring this Friday has almost 20,000 for open interest. This means that if Tesla continues higher from here and stays above 280, market makers are going to have to buy almost 2 million shares of Tesla. That's on top of retail buying Tesla, hedge funds, institutions buying Tesla, or shorts covering. This is an added form of buying pressure in which I expect will continue throughout this week. If Tesla can just move $10 higher to $290 per share by this Friday, you would see 7.5 million shares that would need to be bought by the market makers, not including the open interest today, in which we just went over. You're seeing volume of over 100,000 for some of these most active call positions. That's going to add some open interest. That's going to make for a potentially much larger gamma squeeze if Tesla stock does continue to rally. In other news, the Fed minutes came out today, and they say, quote, "The participants favoring a 25 basis point increase noted that the labor market remained very tight. Momentum in economic activity had been stronger than previously expected, and there were few signs that were clear that inflation was on a path to return to the committee's 2% objective over time." Remember, on the summary of economic projections, all but 2 of the 18 participants expected at least one more rate hike would be appropriate this year, and 18 expected 2 or more rate hikes. Now, the labor market is interesting because there's 2 ways you can cool the labor market. The first way is quite simple: people losing their jobs. That's obviously bad for the stock market. That's bad for a recession. But you can also get rid of the job openings, which don't affect the markets or the economy. And we're going to have that very catalyst or data coming out tomorrow morning. Tomorrow at 10 o'clock in the morning Eastern Standard Time, 7 a.m. Pacific Time, you're going to get the JOLTS job openings for May. This data is 2 months behind, so it's very lagged. But back in April, you got 10.1 million job openings. You're expecting 9.9 million job openings. If this number comes in lighter than that, if it comes in at 9.7 million or hopefully as low as 9 million, that's going to be a super positive for our markets and likely increases the odds of a soft landing. You're also going to get ISM Services PMI. This number is expected to come in at 50. Last month's reading was 50.3, so a slight deceleration. As long as this number doesn't shoot up, it's probably not going to be a negative thing for the markets. You're also going to get initial jobless claims for July 1st. This data is more relevant. Like we said, the JOLTS job openings is data from May. The initial jobless claims is data from July 1st. You're expecting 245,000 initial jobless claims. If this number rockets higher, we've seen that was a negative thing the last time around. So it could be a negative thing this time around. We'll have to wait and see. Potentially coming in line with expectations is the best possible outcome here. Now, as far as Tesla, you have a short position currently of $26.21 billion. This is up 61.3% in the last 3 months. Short sellers have bid off more than they can chew. They were betting and hoping and praying on Tesla deliveries coming in line or lower than expectations. Not to beat every analyst expectation. That's not what they were hoping for. So this puts them in a very bad position. And they are banking on margins coming in worse than expectations. Analysts expect Q2 EPS to come in at 79 cents per share. Before the delivery number, you were expecting 77 cents of EPS. So you really haven't raised the bar too high for Tesla, meaning a lot of people are still very pessimistic on the bottom line profits that Tesla's going to see this earnings season. Whereas 3 months ago, you were expecting 92 cents of EPS. So the bar is still very low, even considering this delivery beat that we've seen. And even after the Model X and the Model S deliveries were up 80% year over year, which those models have higher profit margins. They're the models that are 85,000 to 120,000. Well, these things could help margins. Not to mention what we've seen recently, including today, is the prices of metals are slipping as demand struggles on global economic weakness. This is because of China. What we've seen for months now is this Chinese reopening that everyone was waiting for heading into 2023 did not materialize as strong as people expected. This is causing metal prices to fall, causing lithium prices to fall. All of these are good for margins, but analysts are not factoring this in as a potential positive for Tesla in the way that I am expecting. If Tesla's margins come in with a 2 in front, meaning over 20%, the stock is going much higher from here, potentially could reach all-time highs in the weeks following Tesla's earnings. Now, short sellers just seen, you don't want to bet against Tesla heading into a major catalyst. So odds are, from now until July 19th, you rally to over $300 based on short sellers reducing exposure or hedging out their downside bets with some upside bets, meaning buying some calls or buying some stock in Tesla. Tesla stock also has some pretty good room to run here. If you consider where Tesla is, you're not even at a 52-week high. The 52-week high for Tesla is around $314 per share, which is kind of where I expect the stock to go before earnings. You're still down from your all-time high on Tesla. Go ahead and chart this out. You're still down about 48% from your all-time high. Compare that to other big tech names that are seen as quote-unquote safety. Tesla could rally exponentially from here, and there's really no telling how high Tesla could go. In the short term, things such as the RSI tend to be pretty big deals. The RSI, as you know, was very overbought, and it has since come down. Now Tesla is, if you could see down here, not even close to where it was on an RSI basis back in the first half of June. This is positive. This means Tesla could rally probably over $300 per share quickly before the RSI would be a negative factor for any kind of rally. Tesla has also seen a golden cross recently on both the 50 and the 100-day moving averages, both of those crossing above that 200-day moving average. You have seen some upside here, but typically when a golden cross happens for Tesla, you see excess of 20% upside. So that would suggest that you probably need to see another run higher. Not to mention Tesla could be in a formation of a cup and handle, which is another very bullish technical pattern. As far as analysts today with Tesla, Chris Pierce from Needham reiterated his hold rating, and he does not have a price target on Tesla. Adam Jones reiterated his hold rating. He's with Morgan Stanley and reiterated his 250 price target. With all of the recent price targets we've seen, the average price target for Tesla sits at $213 per share. The stock's currently at $280 per share. This means you probably need to see some price target increases, and when those do ultimately happen, those are positive catalysts for Tesla, in which I expect to happen before or soon after Tesla's next coming earnings report. Gary Black is back on Twitter today saying that Tesla shorts really don't get how important Cybertruck will be to growing the entire Tesla franchise in 2024. With pickups accounting for 20% of the auto market, Black expects a substantial increase in Tesla's total addressable market. Quote, potential customers will see the Cybertruck in person or on social media and go to the Tesla website or store to buy another Tesla model, even if they don't buy a Cybertruck, Black said. Contrary to the tweet's volume forecast, he anticipates a remarkable 53% surge in volume for Tesla in 2024. The average consensus from analysts today is less than 30% volume growth in 2024. What happened the last time Tesla introduced a new model? That was the Model Y on March 13th of 2020. Tesla's deliveries increased 84% in the following year. Every time Tesla has introduced a new model, deliveries have exploded. Why would the Cybertruck be any different? I've personally even been talked to about the Cybertruck from people that don't own trucks, that don't know much about Teslas, saying, hey, have you seen this truck? This truck looks crazy. They say they kind of like it. That makes me very bullish. And I agree with Gary Black. The shorts are off sides here, and they don't see what is coming. That is an eventual short squeeze as well as a gamma squeeze that could push Tesla stock to new all-time highs. Now, it's hard to say when this would happen or how high the stock would ultimately go. It's really a guessing game. I would imagine, with my best judgment, you see a little bit of that action heading into Tesla earnings, a lot of it after Tesla earnings, which could push Tesla, depending how good the margins are, over $350 per share. And then you could see a gamma squeeze and a short squeeze on a significant degree after that. Again, why is Apple and Microsoft with negative growth year over year at all-time highs when Tesla has grown deliveries over the past 7 quarters 50% and growing their revenue and profit numbers excess of 40% this year? Why is Tesla down 48% from its all-time high? That doesn't make sense to me. Eventually, you will see a rapid catch-up in Tesla's share price if the markets remain this resilient and allow for these higher valuations. So that is going to do it for this video. That is all of the news and the know-how that you need to know for today in Tesla stock as well as the markets. If you like this video, if you like my perspective and you want to stay up to date with future videos, hit the subscribe button as well as the like button. Not to mention, go ahead and get yourself some free stock with Webull down below in the description of this video. Deposit $1, get yourself 15 free stocks. I don't know a better deal out there. It's free money. And check out the merch page, link down below in the description of this video as well. If you like something, I mean, it's pretty cool to sport your investments when most people, they don't know about investing. They don't know about Tesla. Obviously, the short sellers are a great example of that. So, thank you for watching. Enjoy the rest of your day, and I will see you in the next one.